Requirement C. Disclose the information relating to audit issue 2 in the notes to the financial statements of CDL for the financial reporting period 28 Feb 20.18. Now, we have identified that this is an error in terms of IAS 8. Now, let's say, for example, that you are not sure of what you need to disclose. My first step will be to open my IAS 8 standard, my contents page, and identify where is the disclosure in terms of errors. Therefore, please refer to your IAS 8 contents page. This is our contents page. Remember my recommendation, add your flag for you to be able to immediately open IAS 8. And remember your flags for your presentation and disclosure. I will be able to immediately open D, as this is my disclosure, my errors. Or if you want to, you can look at your index and identify that this is paragraph 49. Therefore, let's open paragraph 49. In applying paragraph 42, an entity shall disclose the following. Now, paragraph 42 indicates to us that we need to correct an error retrospectively, therefore going back. A. The nature of the prior period error. For each prior period presented, to the extent practicable, the amount of the correction. For each financial statement line item affected, therefore for each line item affected, such as your assets line, your liability lines, or any equity lines, and if IAS 33 applies to the entity for basic and diluted earnings per share. Now, when we refer to the information provided, they did not provide us anything relating to IAS 33. C. The amount of the correction at the beginning of the earliest prior period presented. Now, this is an important one, guys. And D, if retrospective restatement is impracticable for a particular prior period, the circumstances that led to the existence of that condition and a description of how and from when the error has been corrected. Financial statements of subsequent periods need not repeat these disclosures. Now, when we look at this, we need to include the nature of what happened, and then for each prior period presented, the amount in terms of each financial statement line item affected. Now, let's refer to the given information in Audit Issue 2. Audit Issue 2. Now, you will remember we have identified that we need to correct this retrospectively, therefore going back. Now, with errors, my recommendation is that you need to identify what actually happened. Therefore, what is the journal entries recognized by the entity versus number 2, what is the correct method of treating the transaction? And then number 3, will be the difference between number 1 and number 2, and this will be your disclosure. Now, important to remember, when we look at our disclosure, my recommendation is that you need to be able to identify what is the impact on your profit and loss line items and what is the impact on your statement of financial position line items. Remember, this includes your assets, liabilities, and your equity. Now, when we look at the information briefly, you will remember they've indicated to us during 20.18 financial reporting period, it was discovered that CDL had capitalized internally generated goodwill of 3.2 million as an intangible asset in their 20.17 annual financial statements. They've indicated to us that they've amortized this asset, and the cost that led to the capitalization was incurred on 1 April 20.16. Therefore, this is the date that we need to use to start with our amortization that we now need to reverse. And then they've indicated to us that CDL included the amortization in calculation of the tax. However, such is willing to reopen the tax assessment. Therefore, we need to identify that there will be a tax liability line item included in our disclosure. On a new page, indicate to your marker that this will be your part C, and you will identify with this one, I am going to start off with my calculation. Reason being is that at this point of time, I'm not able to include a template in terms of my disclosure, as I need to ensure that I understand exactly what happened and what should have happened. Okay, now this is my timeline. They've indicated to us that on 1 April 2016, the costs were incurred, and our year end is 28 February 2017. Our current year is 28 February 2018. Now, we need to correct our prior figures retrospectively, therefore going back. Okay, so guys, just a quick one. The way that I see a disclosure note in terms of errors is that when you receive, or let me state it like this, that when you prepare a set of annual financial statements, my first step is always to ensure that my prior figures in this question 20.17 agrees to the annual financial statements signed off. Now this is the important one, signed off. Therefore, my prior figures has to agree to my prior 20.17 annual financial statements. Now, what happens if I receive a set of financial statements in terms of 20.18, which is our current year, and there is certain amounts in the 20.18 financials, important, this is in the 20.18 financials, there is certain amounts relating to 20.17 that does not agree. Then we need to identify if there were any restatements of our prior figures. Okay, now let's have a look at what happened. On 1 April 20.16, they've debited intangible assets, which is the statement of financial position line item. Remember, no abbreviations. If the requirement indicates that you need to prepare journals, the requirement indicates that we need to disclose. Therefore, this is purely for discussion purposes. Debit, intangible asset, 3.2 million. Credit, other bank, supplier, we don't know. Okay. Then they've indicated to us that they've amortized the intangible assets for a period of 11 months from 1 April 20.16 until 28 Feb 20.17. This is for 11 months. Therefore, they have debited amortization in our profit and loss, credit accumulated amortization in your statement of financial position. We need to calculate the amount. This is the 3.2 million. No abbreviation, guys. I did not indicate to my marker. Divided by 10 years times 11 over 12. And this is an amount of 293,333. Then you will remember that they've indicated to us in the tax calculation that they have included this 293,333 amount as a deduction. Okay, so guys, now you need to think about this one with me. When you look at this, they've indicated to us that our accounting profit or loss includes the 293,333 amount. However, SARS does not allow this. Therefore, we had to add this back. But remember, we are still busy looking at what actually happened. Therefore, they have deducted 293,333 in the current tax calculation. 293,333 times 28%, and this is an amount of 82133, and this relates to our SARS payable. Therefore, our SARS payable, our current tax, is 82,133 less than what it should have been. Okay? Now we need to look at what they should have done.